So as we prepare for the opening bell in about a minute here, we've been looking through the Bank of America August Global Fund Manager Survey that they do monthly. And the sentiment remains bearish, according to them, but quote unquote, no longer apocalyptically bearish. And also, you've highlighted this chart, Saz, that people are sort of rotating into tech, which is something we talked about at the top that's reflected in the 13F filings, right? That we're seeing some of these investors rotate into names like Amazon.
Yeah, it just got cheap. A lot of these tech stocks are trading below some of the valuations they have seen over the past 5 years. And by and large, sure, sales and profits slowed in the second quarter, but maybe not as bad as feared.
Well, that was the theme that we were talking about with some of the 13Fs as well. The number of players, the whales, if you will, in the big money that are essentially throwing their weight into tech at a time where they're seeing that pullback present an opportunity.
Yeah. All right. We've got the opening bell on this Tuesday. It's Tuesday morning.
Oh, yeah.
And so, to your point, what you guys have been talking about in terms of return here, it's interesting that at the same time, Bank of America says that the sentiment is too bearish for the immediate reversal of the bear rally. So they, like many strategists and investors we've been speaking to, still see this as a bear market rally. A lot of investors and strategists have still been warning June may have been the lows for the year, but may have not been the lows for the year. And Bank of America in particular say, we remain patient bears. They say they would fade the S&P if it gets above 43.28. Well, we're not there yet, so they're not triggering a fade yet as we see things open up to the downside here this morning. Despite, I have to say I'm a little surprised. I thought Walmart would create more of sort of a halo effect.
A relief?
And that doesn't seem to be happening.
I mean, the report could cut different ways. On one hand, you're hearing Walmart say, hey, our back to school is off to a decent start here, or a solid start is their commentary, but we have consumers trading down to canned tuna and chicken from deli meats. I mean, that's not exactly a rip-roaring economic environment.
When you were talking about the volume earlier, well, who doesn't? I mean, unless you're going to Subway. But I think to take the contrarian side of this too, it really is, if you do see higher volume, if you see higher foot traffic at a Walmart, what does that also spell out about the state of the consumer right now? They're trading down even on the higher end for a reason, and they're coming into a Walmart because, it's so close in proximity. 90% of America lives within 10 miles of a Walmart, and so if you're able to then trade down that easily and for an extended period of time, pick up everything that you need from a one-stop shop, why not?
Yeah, and Walmart also, too, noting low double-digit sales increases in grocery. First thought, how's that Kroger? How is that Safeway quarter looking? Have prices have just become so inflationary, traditional grocery stores, now you're going to Walmart for all your groceries?
Well, I do wonder where people are trading down from, right? Are they trading down from a Safeway and a Kroger? Are they trading down from a Whole Foods even?
Whole paycheck.
There are lots of other grocery chains out there as well. So I do wonder who they're gaining market share from right now.